Hello, and welcome to this month's View from the Lighthouse. I am David Hansford, Executive Director and Portfolio Manager for Long Beach Capital. This month we will be discussing the Iran war, ceasefire and peace negotiations, and how our portfolio companies are making use of AI to deliver improved products and services to customers and improve efficiency within their businesses. The ceasefire in the Iran war holds through the US blockade and ongoing negotiations. The fragile ceasefire between the US and Iran has largely held for the last month, although several conflict incidents have taken place. The US continues to maintain its blockade of Iran's ports, while Iran maintains effective closure of the Strait of Hormuz. There is a high level of distrust between the two protagonists, and progress in the negotiations towards a comprehensive peace agreement is difficult to discern. The US and Iran are digging into their respective negotiating positions and demands, while at times issuing conflicting statements on the talks' progress. We continue to think logic, the practical realities of a conflict in which neither side can prevail by force, the need for a resolution prior to the upcoming US midterm elections in November, and significant global pressure will encourage the US to reach a negotiated resolution with Iran in the near term. Is time up for the Opec oil cartel? The UAE announced on April 28th it would be leaving Opec with immediate effect from May 1st, 2026. The UAE was the third largest producer in the OPEC alliance, and we will not be surprised to see additional countries follow the UAE and exit OPEC. The UAE's departure allows the country to invest in production capacity and increase output beyond previous OPEC limits, with a potential demand cliff at some point in the future. As renewable energy technology rapidly improves through innovation, a sensible strategy for oil producers is to maximize revenues in the short term. Many of the oil-producing countries, including those impacted by the war in the Middle East, together with Russia, Iran, and Venezuela, all need to maximize current revenues from energy products to rebuild their economies. A peace agreement which lifts the US blockade and reopens the Strait of Hormuz is likely to mark the start of a bear market in oil. The inflationary impact from Iran war is starting to appear. The Iran war is contributing to higher inflation through two main channels. Firstly, the almost doubling of oil prices is feeding through into higher transportation costs, and the supply chain disruption in the Strait of Hormuz is leading to shortages of key raw material inputs for global manufacturing. US CPI inflation increased to 3.8% in April, while core inflation was 2.8%, both well above the Fed's long-run inflation target of 2%. This likely rules out additional interest rate cuts from the Fed in the near term, which should support the US dollar. Countries which import oil and other energy products, including South Africa, remain more exposed than countries, including the US, which are net energy exporters. While the Iran war situation is dynamic, we continue to see an ongoing conflict and higher energy prices as politically unsustainable for Trump, and expect this to pressure the US to reach a negotiated resolution in the near term. Global equity markets' focus on AI infrastructure misses out on the AI beneficiaries. Global equity markets are currently focused on companies benefiting from the physical AI infrastructure and capex boom, semiconductors and data centers, while giving little recognition to companies which benefit from the use of AI. In recent first quarter earnings reports, management of our portfolio companies across the board spoke about how their companies are integrating AI into business operations, taking advantage of large proprietary data sets and extensive customer relations to use AI to increase revenue growth rates, reduce costs through efficiency, and improve margins. To highlight a few examples, how Airbnb uses AI. Airbnb is integrating artificial intelligence across its operations to accelerate product innovation and drive cost efficiencies. Here are 3 examples of how Airbnb is integrating AI into business processes to become more efficient and deliver an improved experience to customers. In software development and engineering, nearly 60% of the code produced by Airbnb's engineers is now co-authored with AI. The company estimates this usage is twice the industry average. This high level of adoption allows engineering teams to move at founder mode speed, shipping new features and iterating much faster than previously possible. Airbnb's AI assistant now resolves over 40% of guest issues without requiring a human agent, a significant increase from roughly 33% in Q4 2025. This automated system handles nearly 100 evolving policies and millions of data points to adjudicate cases accurately. As a direct result of these efficiencies, Airbnb's cost per booking has decreased by approximately 10% year-over-year in Q1 2026. AI is applied to the hundreds of millions of views on Airbnb listing pages to help guests process information. Airbnb uses AI to summarize guest reviews and improve search ranking and matching. By providing more relevant listings through AI-driven improvements, the company has seen a positive impact on total bookings. Airbnb's AI initiatives contribute to a broader strategy where AI acts as a disruptive accelerant for the business, enabling higher productivity and lower operational overhead, which deliver long-term growth, margin, and cash flow benefits. How Cloudflare uses AI. Cloudflare is aggressively integrating AI into its internal operations and core business model, including a recent evolution towards an agentic AI-first operating model, where AI agents form a core part of the company's workforce. As part of Cloudflare's transformation to become a leading AI agent-enabled company, Cloudflare recently announced reduction in its workforce. Here are 3 examples of how Cloudflare uses AI within its operations: threat detection and product improvement. Cloudflare uses machine learning, ML, as a global immune system to identify and neutralize cyber attacks. Cloudflare's ML systems block an average of 190 billion to 247 billion cyber threats every day. Cloudflare's systems improve the company's products automatically with every customer request, creating a shared intelligence that allows the company to operate at a massive scale with high efficiency and lower human intervention costs. Cloudflare is architecting its workforce to rely on AI agents for internal tasks and software consumption. During the month of January 2026, the number of weekly requests generated by AI agents more than doubled across the Cloudflare network. By embracing an agentic AI-first model, the company aims to be faster and more innovative, enhancing the value delivered to customers as software shifts from human-centric to agent-centric consumption. Cloudflare research teams focus on running AI workloads significantly more efficiently than traditional cloud providers. Cloudflare is able to extract up to 10 times the amount of work off the same GPU compared to major hyperscalers. This results in lower operational costs and higher capital efficiency, and allows Cloudflare to invest behind AI demand without absorbing the large GPU-related CapEx costs that currently burden its competitors. Cloudflare's 10 times GPU efficiency advantage is driven by a fundamental difference in business models and technical incentives compared to traditional hyperscalers. While hyperscalers focus on renting out hardware, Cloudflare focuses on the actual work that's getting done. Cloudflare is a leading enabler of the AI agentic internet, with one of the largest distributed edge networks and agentic platforms. Cloudflare is likely to play a critical infrastructure role as AI, and the agentic web continues to grow exponentially. How Shopify uses AI. Shopify has deeply integrated artificial intelligence into its internal and merchant-facing operations, viewing the technology as a native language and an exoskeleton that allows the company to ship products faster while maintaining a flat headcount. Here are 3 examples of how Shopify uses AI. Shopify uses AI to significantly accelerate its internal technical operations in software engineering and product development. The company has deployed an AI coding partner called River directly into its internal communication systems to assist the engineering team. As of early 2026, AI writes well over 50% of Shopify's internal code, and management expects this percentage to continue to increase. This internal usage has fundamentally changed Shopify's operational efficiency, allowing the company to keep its headcount flat while increasing output. Shopify shipped over 300 new products and features in a single year. By delegating execution to AI, engineers can focus on higher-level judgment and review, which helps maintain high operating leverage and funds further investment in infrastructure. Shopify provides merchants with an AI-enabled commerce assistant named Sidekick, which is paired with Pulse, a feature that proactively suggests business improvements based on store data and market trends. In Q1 2026, the number of weekly active shops using Sidekick was up 4 times or 385% year over year. Additionally, over 12,000 custom apps were created using Sidekick in Q1 2026 alone, and nearly half of all Shopify flows, automation workflows generated during the quarter, were built with the tool. Sidekick contributes to lower costs for merchants by performing complex tasks such as creating social proof pages or editing themes in minutes at zero incremental cost. Previously, these tasks might have required hiring multiple specialists, including designers, copywriters, etc., and taking several weeks to complete. This speed allows merchants to run smarter, more productive businesses, which in turn drives GMV growth for Shopify. Shopify has built agentic storefronts and a universal commerce protocol to ensure its merchants' products are discoverable within AI search platforms like Chat, GPT, Google, and Microsoft Copilot. In Q1 2026, AI-driven traffic to Shopify stores grew 8 times year over year, while total orders originating from AI-powered searches increased nearly 13 times. Traffic from Shopify's catalog-powered AI searches converts at twice the rate of general AI searches that rely on outdated or scraped information. Shopify's use of AI democratizes discovery by allowing relevance rather than purely advertising budget to influence reach. It serves as a demand creation engine for small and medium-sized businesses that might not otherwise have access to high-level performance marketing. By surfacing the right products to the right shoppers at the right moment, Shopify accelerates the growth of new buyer orders, which occur through AI searches at nearly twice the rate of traditional organic search. Shopify is the leading independent commerce platform for both startups and the largest global brands. Shopify is the technical leader for AI and agentic shopping and has a large runway for growth as commerce continues to move online. In conclusion, we believe significant opportunities exist outside of the usual large-cap technology names. Global equity markets have recovered off the March lows, but the opportunity created by the sell-off in growth and technology remains, especially in companies outside of the MAG7 and headline indices. Growth and technology shares currently offer attractive valuations, strong earnings growth, and attractive long-term prospects. We expect favorable conditions for corporate earnings and equity markets through the balance of this year. The Long Beach funds are invested in innovative, well-managed growth businesses, which are aggressively exploiting AI and have substantial data advantages and extensive customer relationships. We are encouraged for the future potential returns from our holdings in the Long Beach portfolios. Thank you for listening, and join me again next month for another view from the Lighthouse.